All right, guys, we're back with another trade recap on advanced micro devices. AMD, the gift that keeps on giving this week. Let's show you what we were thinking today. So if you watched the previous video earlier this week, you saw that we broke a multi-month support area around this 132. Few days ago, we got this nice move lower from 132 down into the 120s. And then we had a little bit of pullback into that previous support area, which is now acting as resistance. So coming into today, I wanted to see if we could break the lows of yesterday's candle. Let's draw that in. And I thought if we could get below yesterday's low, this is like a little bear flag formation on the daily chart. And we could start to break below this little flag here. And if we could break below that flag, there's going to be some opportunity for another short trade on this one here. So let's clean this up a bit here. So coming into this morning, I wanted to see if this stock could go red on the day and break below yesterday's low. So this line here, let's zoom out a little bit. Okay, so yesterday's price action here made a low of 129. It closed at 130, 130.60s. And then this morning, we gapped up a little and had a really nice green to red move right out of the open. And we broke yesterday's lows. So that to me is a great signal that we might have some momentum and there might be a trade for us on the downside here. So after price kind of bounced off of this low 128, 127 area, I'm watching to see how it's going to react as it comes back into that previous support area. So the bulls tried to take this over VWAP, but got rejected. So initially I thought, okay, this is a great entry right here in the mid 128s, but it got bought up really quickly. So I actually took an entry here, but seeing how quickly it got bought up and the bulls took it over the VWAP area, I had to stop out. So sometimes we're wrong in the trades, and that's why we set stops. It's the cost of doing business. So we take our losses when we need to, and we just wait for the next trade. It's just the cost of doing business. Every business has expenses, and sometimes you got to pay those expenses, but then you get these really nice moves that actually pay the bills and bring in the profits. So whenever you get stopped out, you just move on to the next trade. And as you can see, we've got another bear flag formation here. So we got stopped out on our initial trade. Now we just wait for it to set up again. So what are the bulls doing? What are the bears doing here? The bulls try to take this up over VWAP, but quickly get sold back under again. And we break below the bear flag. So this is another great entry signal. So I entered that position right back on. Again, just setting my stop above the VWAP area, and then was looking where I could add to the position. So we got a really good sell-off here. The next thing I want to look for is how it's going to react to the low of the day. So as we started breaking back down into the low 128s, I added to the position in anticipation of this break, which ended up happening, and we got a really nice resolution to the downside here. So step one, set your stop loss. Step two, add to the position if it goes in your direction, lower your stop, I guess step 3 would be lower your stop loss. And then step 4 is look for areas to take profits. So as you can see, there was some really nice selling going on here. There's really no reason to take any profits until you get down to this area of consolidation here. And this is something I always like to keep an eye out for. This is kind of a perfect example, because if you look at the volume that's happening here, you can see these candles here. Here's our volume. We've got 500, 600,000 shares per candle. And then all of a sudden we get this massive 1.2 million volume candle right at the lows. So you'll often see there is the most volume right at the bottom. And that actually happened to be the case today. So when I saw this really large volume candle, I started to think, okay, now it's probably going to be time to take profits pretty soon. And I ended up taking half of the position off as we broke back above the 9 EMA, and then the other half off as we got over 126 here. So that's just a prime example of how I manage my trades. I took a 75-cent loss over here, but the winner more than paid for that, and I think I got around 250 per share on actually double the position. So that's just really how you got to look at things. And I wanted to show you, I'm going to go in depth on this a little bit more. Just bring it up. Bear with me a sec here. Okay, coming up here. I want to show you how I look at my risk versus reward. So this is a great little chart here that every trader should base their system around. So when you're looking at your risk and reward, coupled with your win rate, you want to be able to stay in this green area. So when you're targeting your profit potential on a trade, you have to take into consideration what you're risking. So in this case, I was risking 75 cents per share in the hopes that I could make somewhere in the $1.50 to $2.50 range. In that case, what does my win rate need to be? My win rate is, it kind of fluctuates between 50 and 60%. So I need to stay in this range at least to be profitable. So that means if I'm risking 75 cents, I need to make $1.50 on the trade. That way, I only need to win about 50% of my trades in order to be profitable. So I'm going to do a more in-depth video on this, but this is something that every trader needs to think about and take into consideration in order to maximize your profits. So in this case, I took a 1 unit loss over here, but I gained more than 3 units over here. So on this particular day, I was in the 3 to 1 risk versus reward win rate. So I'll do a more in-depth video on this head, but I just wanted to highlight that as an important factor in your trading. So I think that's it for today. Stay tuned for another video, and if you found this helpful, hit that subscribe and like, and we'll see you on the next video.